Hi everyone, it's Monday, the 11th of November, 2024, and it's time for my weekly video log. This week I'm going to take an in-depth look at one stock, AEO, American Eagle Outfitters, and talk a bit about screening. So let's get cracking. So AEO looks good. The charts look good, that is. It's at a nice low and the indicators look fine, but it's got earnings due to be announced on the 19th of November. So that's not far into the future. There isn't time to just trade it and ignore that, so we need to look at it in some depth. So let's have a look at the various bits of research that I've been looking at over the last 24 hours. And we'll start with TICN. For TICN, they score AEO with a 38 for quality and a 48, very good score for price. And that's based on a report that came out just on the 18th of October, so fairly recent. And it's strong. I don't think I would quibble about the score on AEO being only 38. It's just not that accurate. So that looks okay. Next, Value Line. And Value Line is scoring this as a 3 for timeliness. And that means that it's a hold. Something else of interest on this sheet is that they've got rid of their long-term debt. They've been paying debt off. Always good news. We look at the forecast that they're giving, which I don't give a huge amount of credence to. They're talking about a latest price on here of 1873, which is about right. And they see it getting to sort of 15 to 28, midpoint about 26. That's fine for my purposes, no problem whatsoever. And in the longer term, they say 30 to 50. However, Value Line are just one analyst with one broker effectively. So let's see what everybody else thinks. To give ourselves some benchmarks here, sales are predicted by Value Line to grow to 6.425 million from 2024 over the next 3 to 5 years. That's 18%. And earnings per share are up to $3.05, an increase of 69%. That's still pretty high. And the recent price that they're showing on this report is $20.95, where it actually closed on Friday at 1873. And the stock has fallen in price since the beginning of October by 16%, at the same time as the S&P 500 went up by 5%. So perhaps not quite so good. At the bottom of their report, we get a generally favorable report and a good outlook. But they look at something I look at all of the time, earnings predictability down at 25%, 25 out of 100, in fact. So not strong at all, but overall, it's a good narrative on the stock. Here's what we get by looking at better investing. So the green line at the top is sales. So we've had a good old steady increase in sales. Earnings per share has generally been a bit ragged, but that does take into account the pandemic, and the little black lines in the middle are the annual high to low linked by a bar. So the earnings per share have been rising quite stiffly, and the sales are going up fine, but it's at a low price. That looks good. I looked at the average growth here, sales in millions, and I knocked out 2020 because that was very low. That was the pandemic on both sales and earnings. And there we see the average 5.6% in sales and 2.6% in earnings per share. Not brilliant, but for my purposes, a short-term trade, perhaps good enough. Zacks rate this as a buy. So they have a strong buy or a buy. And this, they say, is a buy. And over at Yahoo Finance, we can see some of the figures that Zacks are even basing their work on. The number of analysts looking at this stock. And the number of analysts is 10 as far as earnings go. And the average estimate for this quarter is 48 cents. That compares to Value Lines, I think it was 57 cents. If we look at the revenue estimate, then the number of analysts getting involved in that has actually gone up from 9 to 10. That's actually a good sign. And the estimate that they're making for the last quarter, 1.38 or 1.3 billion, that's actually higher than the well, it's the same, sorry, as the Value Line estimate. So we're all good here. So in summary, I come to this. The stock is at a very nice low, especially as it's been tracking down. It's a very strong point of support. It is absolute dead center in the middle of the buy area. And the risk to reward ratio is a nice three upside to sort of one downside. That for me says, yes, I wouldn't want to do it for all of my portfolio, but as far as one stock goes, I think I'm happy to do it. I'll be looking at AEO again when the market opens today, and I may well go in, and I would do that as a buy rather than selling a put on it. Here's the actual chart, and you can see it's got a very nice sideways pattern, which doesn't go back that far, sort of July. But if we trade this in the way that I'm thinking, which is my sort of 3 to 6 month trading strategy, then had we done that over that period, we could have made 17% in 17 days, come out, gone back in, 20% in 17 more days, come out, gone back in, and made 21.7% in 16 days. If we'd just gone in at the beginning and come out the end, then it would have been 41%, so significantly less. So that's what I'm looking to do with this stock. I'm looking to get in at this support level and to play it back up to this sort of $22 mark and then get out again. That's what I'm looking at on it. Okay, so just a word about screening. So the TICN scores are effectively a screening system and a good one at that. The back testing shows that the 4x4 system has a very successful prediction rate of success. However, the system is far too often ignored. We are in and we get recommended lots of stocks which are not 4x4s. And that the whole thing is a bit strange because what we tend to do with the TICN system is to find stocks and then score them. Quite a laborious process at that. Whereas the other screening systems around, they screen to find the stocks and get rid of that laboriousness. They don't get rid of all of the work, but they do get rid of some of it. Now, because I'm moving to a more sophisticated trading strategy, in fact, 4 strategies, short-term buys, medium-term buys, long-term buys for dividend and growth, and also the selling puts at out of the money near dates, then I need something a bit more sophisticated because I want to screen for those different strategies. So I'm going to use some other screening strategies as well. And between them, I've got something like 290 parameters to choose from. That's going to drive you, of course, up the wall, but it is very much more sophisticated screening. My picks then for the week. So these are based on Value Line, Better Investing, Stockmaster, and Zacks. That's where I get my long list from. Then I go through the analysis as I've demonstrated a bit earlier. And here are what I come out with. Now, I won't trade all of these. Some will be traded on that short, some on the medium, some on the long term, and some will just be traded on the put selling strategy. But there they are. So even in this very strong, very high market, there's plenty to go at. I'll be speaking this week to all of the clubs and in particular to Fortune. So I'll be trying to persuade them, if I need to persuade them, to merge with the Young Stars Club. And that's going to see the Young Stars take off like a little rocket ship. If anybody has children in their lives that they want to have involved in this, now is the time to get them involved with the Young Stars Club. It is the parent, guardian, grandparent, or whatever else that has to actually join. However, the benefits will accrue to the kids. Facebook group still going well, not growing perhaps as fast. I've got 80 odd members and I keep picking up the odd ones each week. If you're not already a member of that Facebook group, the Extraordinary Stock Trading System, I recommend that you do become a member. I don't flood it with posts, but I do try and put little interesting tidbits in there. And if you're not already a member of one of the investment clubs in the myinvestmentclub.co.uk system, look at that website. You can join us. We're getting fantastic results. You don't have to put a fortune in. Some members only put £100 a month in. Some members put in hundreds of thousands or even multiples of hundreds of thousands. Whatever is comfortable, whatever you can afford. Now, to mention, we have got the next event coming up, which is actually going to be in Dublin, somewhere near the airport, so it doesn't involve too much messing about with traveling. And that will be, I believe it is on the 21st, 22nd, and 23rd of March. And this is going to be a very different event. In fact, it's going to be a conference. I think we are looking to accommodate new members to do the basic training, possibly on the Sunday, but the Friday night and the Saturday will be based all around the new good stuff that you're seeing in these videos. And hopefully we might be joined by some special guests, and hopefully we might even get Anna to come along and join us as another special guest too. So that's it for this week. Thank you very much. Have a good week trading. Talk to you soon.